investors at the Treasury Bills market sustain the demand for high-yield Treasury bills from the short to mid-end of the curve. Traders at Access Bank expect similar sentiments today. Senator Audu, a Treasury Team Member at Access Bank, joins me now for a market discussion. Thank you so much for your time on the show today, Senator. And let's get a run-through of the market this week.
Thank you, Ken. Thanks for having me. So as you rightly said, the market has been bullish today, this week, largely because of credits towards the end of last week for FAC inflows from the Federation Account Allocation Committee, as well as other credits for states. So the market opened today with a liquidity figure of just above 100 billion naira in credit. This has spurred a bullish sentiment across the fixed income market. In the Treasury bills market, we've seen interest across the short to medium tenor Treasury bills at about 22.8% levels, and we've seen interest in the long-end domos, which have traded just above 23%. The bond market has not been left out. We've seen a bullish sentiment, a slight bullish sentiment in the bond market. Both the on-the-run bonds, the 2029s and 2031s, have traded below the auction rates. To give you some color, the 2029s currently trade at about 20.5%, while the 2031s and 2033s are trading at about 21.15%.
All right, but for Tbills, though, what's your outlook for next week, and also what's shaping the demand for automobiles?
Okay, so on for the demand for automobiles, the automobiles rates on the long end are significantly higher than where you will get NTBs for a tenor that long. So to give you some color, the NTBs are trading at about 20% for the 1 year bills, just above 20%, 20.3% levels, while the almost for comparable maturities are trading at about 23%. So for a higher yield, investors might be best served investing in those automobiles. For our outlook on the Treasury bills market, this week, barring any OMO auction, we expect that the market will continue to be bullish, but the CBN might come in, given that the market is in positive, the liquidity market is positive. We might see the CBN come in with an OMO auction. Those OMO auction rates have been printing at about 24.3% at recent auctions. So that might be, if an auction is announced, that might switch market sentiment to a bit more bearish.
But looking into next week, though, how do you see secondary market activity shaping up then?
Next week, there's an NTB auction on Wednesday. As we've seen, as the trend has maintained, we've seen that when these auctions are approaching, market participants exercise some caution and remain on the sidelines. So we do expect that ahead of that auction on Wednesday, market participants might slow their buying pressure ahead of that auction. Of course, the projection there will be that at the auction you can get better rates. So many of those market participants will remain on the sidelines ahead of that auction. For the bond market, there is no auction until next month. So we do expect that market participants will still continue to cherry pick, try to see if they can snap up some good deals on those on-the-run bonds, the 29s and 31s, as well as the 33s.
And I'd like to get your take on the Naira, the performance of the Naira, and what are your expectations going into next week?
For the FX market, the CBN has maintained its interventions in an effort to keep the rates at the current levels. We've seen the CBN come in on Friday last week, and the CBN also came in yesterday to sell to banks across the market. As a result of these efforts, we saw an appreciation in the NFM rate yesterday by about 40 Naira. The NFM rate closed at about 1,630 Naira per dollar. So we've seen the CBN maintain its interventions to keep those rates on the low side. But what we've continued to see is that the demand in that market has continued to outweigh the supply.
Yeah, on the reserves, though, and how the government CBN has managed its interventions, what's your take on the FPI activity in the market?
Okay, so the reserves have largely remained just below. So we've actually observed an increase in the reserves over time. As of yesterday, the figures from the CBN website shows that the reserves are just below $40 billion, so about $39.44 billion, which is quite a healthy position, a relatively healthy position. This has largely been driven by facilities that the government has secured with supranationals, as well as inflows from foreign portfolio investors. So the very attractive rates on the OMO bills, the yield on those OMO bills are at about 32%, have been quite attractive to the foreign portfolio investors. So we've seen the CBN maintain those auctions to keep the market attractive for these FPIs, and we've seen them coming as well. So those are the large contributing factors to the robust reserve figures that we currently have.
Yeah, but looking down the line, though, how optimistic are you on the electronic foreign exchange matching system? I understand that there's supposed to be a 2-week test run next week.
Yes, so the CBN is doing a lot of things to improve transparency and confidence in the FX market. So we've seen the release of the codes. We've seen a revision in the FX code. We've also seen the matching system that you alluded to here being implemented in the market. So we've also seen the CBN release information on the interventions they're doing, as well as market activity in the FX market. All these initiatives are geared towards ensuring that the FX market is as transparent as possible, because we know that if this market is transparent and can inspire trust, we'll see more inflows from foreign portfolio and direct investors. So definitely, this is a welcome signal to the markets, both local and international, and we do look forward to more initiatives by the CBN to spur transparency and confidence in this market.
All right, and thank you so much for your time. Definitely quite a lot to look up to in the market for the rest of the week and going into next week. Senator Audu there, a Treasury Team Member at Access Bank.